Hello guys, welcome to the Trading Parrot. From Saturday, we are talking about a potential breakout from this bullish flag on the 4-hour time frame. I want to talk about the potential for this confirmed breakout to actually hit the target of 74K. As you can see in here on the 4-hour, we already have a higher high and higher low. So this could potentially put an end to the rolling over that we were talking on Friday and Saturday as well. This is the best chance that we currently have for continuation of the weekly breakout out of the Megafon pattern, at least if we want that to happen in the very short term. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And yes guys, yesterday we made 364 likes. On Saturday, 363. It seems like the same people are hitting like constantly. We need more people to get to the 400 likes eventually. That really will change this channel forever and you will be part of that. Yesterday we were covering the 200 versus the 50 daily moving average, potentially printing a bullish breakout. I was wrong yesterday. I was expecting on Sunday to get that confirmation, but on Sunday, as you can see in the data window on the right hand side of the screen, the closes were 63.262 versus 63.271. That means that on the close of Sunday, we are still not doing the bullish cross. But don't worry, because most likely today that is going to be the case. As you can see again on the data window, today the green is already above the red, and it seems 100% unavoidable by now. Watch my videos on Saturday and Sunday to make sure that you don't over expect from something like this. Yes, past performance has been great, but I share some examples in the past where it's not just not as great, but it can also be marking a local top. And the breakout on the monthly above the Megafon pattern, you can see in here that it hasn't looked as beautiful as this for quite a while, because we've been struggling in the past few days, and now we are at 68. Earlier we were very close to 69, and that is making it a lot more achievable to potentially start challenging the 71K, which is the highest close in a monthly candle for the whole history of Bitcoin. And all of that is happening at the same time when no one cares. These are the searches for Bitcoin literally on Google Trends, and we are at a very low levels, very similar to what we had before the continuation of the strongest leg up on the previous bull rally. Watch my videos on the weekend where I go a lot more in detail, and I question what could happen in this case where we clearly don't have retail yet in the same numbers that we used to have when that big leg of 2021 started. But we do have something new, which is the institutional interest. And you can see the inflows have been record in October, taking advantage of the seasonality expected of Bitcoin performance in October, which together with the big whales continuing to accumulate with full confidence in here, as opposed to distributing, which is what we had in the past 8 months, is what leads me to say this is our best chance relative to what we have in the past 8 months. Do I think we have everything on the table, checking the boxes to say that we must have an impulsive move of 200% from today? I think we are far from that. And I won't bore you with the details once again. Watch my video on Saturday, that one is packed with that, and the one I published on Paul Barron Network on Friday as well, where we talk about global liquidity index, dollar, gold, and what the Fed is doing with their own money, with their own pocket. Each one of them are missing something. So if this was to rally, it will be the first rally that does it without any of the 4 more fundamental pillars for Bitcoin to rally, which has been present in every single rally in the past. Maybe not 4 of them always, sometimes just 3, sometimes just 2. But at the moment, none of them are here. And let's talk a little bit more about short term for the price action, because this is time sensitive. This has to do with swing trading, nothing to do with selling your Bitcoin for long term or adding more. This is just swing trade opportunities. And you can see that over the weekend, we form a CME gap in here that is highlighted by this red area. It's roughly a 1,000 gap on CME. That's because on Friday, CME went offline roughly at 67.2, 67.3, which is a very common area traded across all this range of 2 weeks. And we started moving already with the price even reaching 69.5. So there is a high likelihood that the price now, as I say yesterday, may have to come back and close that gap. That from where we are on CME is a move down of $1,500 down. Remember that the price on CME is different than the price on spot on futures on different exchanges. It's roughly $200 more expensive. So when we say we need to reach 67.280, that probably on Binance Spot is $67.80. We already closed the gap from the previous week, and the 54 to 54,500 is still open. Over the weekend, we closed this bearish cross on the MACD, and we cover extensively what I'm expecting to happen on the video on Saturday. Go and watch it. In a nutshell, I'm expecting less of a drawdown based on how this ascending channel is currently behaving. And going into the swing trade that we introduced on Saturday, we were roughly around here, and we drew this line breaking above the bull flag and coming back for a retest. We also provided this target at 74.6 based on the high of this area of the bull flag. And so far, everything is there to confirm that we have a breakout. Now it's a matter of waiting and seeing if it's going to play out. I remind you that at the moment, this breakout has a huge challenge. From the technicals in here, everything looks perfect. But under the hood, if you take the risk of entering in such a trade, be aware that the liquidity at 70K at the moment is roughly $121 million. You can see it in there highlighted in the chart of the past 6 months. There is nothing similar below or above the price. And we could say that the largest whales, the brown ones, are just going sideways. The purple ones pretty much sideways too. And the previous time that we have something comparable to this, we need to put the 3-year chart, and I can show you that liquidity there is 134 million, and you can see clearly that it never got executed. It was just there to make sure that we have a last final dip that they intentionally cause. That's my speculation, because they were aiming to ride October pump from a lower price. So I'm no one to tell you that that's going to be the case again, but I like to have that on my desk to save some space for that potential outcome, because I don't want to get tricked once again by the same stupid bullshit that we have to see in that price action there. They might do something different. Their crap might become even bigger. Who knows? But we are not looking away from that fact. On the RSI, we also have the breakout, although the retest was a little bit all over the place. If you move the line to the previous touch, you could say it's a little bit healthier with this fake out there. But since we are forced to move this line there, yep, it's not as clean, but it is a breakout. And currently, the breakout is held by this line there. So that means that we can afford to move all that we want above it, but not to cross this line in this way, because that puts the breakout in danger. On the daily time frame, you can see that the battle continues. We are still here in an area where we can qualify it as a daily bull flag now, no longer 4-hour, but you can tell that the 4-hour has already broken out. So we are in the lookout now, or we should be in the lookout for a breakout on the daily. So we can start placing lines like this, trying to see if there's anything like a breakout. This looks like an early breakout, but a little bit odd for me. So I'm not sure if we should be placing the flag like that and waiting a little bit longer, or claiming victory and taking an aggressive approach and saying, well, we also have the breakout on the daily. I think my preference is to keep an eye on how the 4-hour continues to behave. I would like the 4-hour now to put a low, take the fair value gap, and continue challenge the 68,900 and hold on there. that will be an ultimate signal that this is no longer rollover. Remember that up until Saturday, we were saying this could be rollover, but this area in here is already putting that rollover in a state of no longer bearish. Why? Because we already broke this high and we are already putting higher lows as well. So I'm pretty sure that the shorts that are here, if they know what they're doing, they should start thinking things might become a little bit too bullish for what they were expecting. In the RSI, we are in the middle of the channel, so this RSI doesn't really tell us much. There is a very small local breakout in here that could give us some additional upside on the daily, but we have also broken down from this and we don't know when is this going to reset. If it's going to use that breakout we just showed before and continue hammering the 75, which is the next level where we touch the top of the channel, or if we are going to respect this breakdown and we are going to continue until we reset on the bottom of the channel. So I will say that the daily is a bit messy at the moment. We need to stick to what the 4-hour is doing to get an early signal for this to fail or to get an early signal for this to continue. On the open interest, we are back in the game, guys. We are above 21 billion, breaking and holding above it, which is great. We did use the bottom of this ascending wedge, which is bearish, once again as support. Impossible to discard if we are going to do it again and again and again. Impossible to discard, we are going to break down. But seeing that is once again in here is showing the strength of the bulls coming from futures. They want to hit that top. They want to ride once again a swing long and hammer the excessive shorts. Unfortunately, we can see that spot still is not impressed with that. There is no breakout of spot buying big at this point in time. Very disappointing, but potentially futures could do some more stuff at the top in here. Hopefully the inflows of ETFs and the accumulation from big whales, pretty much all institutions, can get the price to start the party of liquidations at the top of the price, take those billions of dollars in there and give us some upside. Remember, we're a group of retail here. We are very small amount of people trading as retail. And I think more than ever, we need to pay attention to what those big players are doing to give us hints of where we are heading. Because in numbers, retail is very small at the moment. At this point in time, in September, monetary policies change, gold broke down, dollar broke down. The money printing was already way ahead. And up until November, it will have printed so much money that there's nothing that can compare to this in history. Of course, it made it really easy to get into here. We do have some money printing in China, but it's not as big as this that we had the previous year. I will say it's even less than half. And the global liquidity index is in the area of the breakout, but is still retesting. And it could potentially still make a lower low. It's battling to confirm that this will be a higher low, and potentially we might expect to get an actual higher high, which will be awesome. But even if we get that higher high in here, this is far from what we can see on all that area there in 2020, in 2021, all driven by what happened with the COVID situation. And we have a new reading from the Fed, meaning that they have bought more assets once again, but it's very mild. Look at the value on the data window, right-hand side. We have 3.2 trillion and it went to 3.227 trillion. So that is just an increase of less than 1% in assets. That is kind of the liquidity that they are committed to inject in bonds in the economy, still far from breaking this trend line and massively far from what they were really doing in 2020 and 2021. So no wonder why there is no retail. Retail needs that cash in their pockets. There's no science about that. Long-term holders continue to just go sideways, no news about that. Megafon pattern continues to look really pretty, even prettier than on the weekend. Weekly RSI, weekly stochastic RSI, both are behaving as if we are heading for continuation to the upside. Stochastic RSI getting at the top end in here. That is when things get really heated. And we close the RSI weekly at a level of 57, almost 58. Far away from touching the support, which is great. And this weak candle, which is currently still moving, is pointing towards the support. Of course, if we continue pushing higher, that could lead into the resistance of the yellow line. Watch my videos on the weekend. I give lots of alpha about this yellow trend line. Is the most important one in any single chart I show for the full bull market of Bitcoin. Liquidity. We're heading towards the 70K liquidity, and things are becoming slightly easier from the point of view of liquidity pools, because we have new liquidity in here that is in the red, and we are building a bull flag. So chances of taking at the very least 69 in here are pretty high. If you look below the price, there's nothing that comes even close up until the mid 60s. There is an area here at 67.3, and the reason I'm showing it to you is not because it's significant, but it's because it's overlapping with the liquidity we have in the CME gap. And I think the CME gap must be filled at some point this week. Any bearish news, boom, filled, gone. And the numbers I gave it to you in the beginning of the video. On spot, this should be $67 and $100 roughly. And here we have some liquidity slightly overlapping with that. Here, some liquidity below the CME gap from 66.8 to 66.6. And on the 4 hour here, I'm just spotting potentially a double bottom formation that is forming with a neck at 68.6. Using the high of this could take us to roughly 72K. So let's see if that holds. Let's see if we don't get another big rejection. Like every time we get to 68.7, we see a big sell-off. In here, we move down 2.5%. In here, we move down 5%. So hopefully we don't see another rejection there. If we don't, if we see a small, very tiny rejection of 0.5%, less than 1%, and we stick around there and we start pushing and confirm the breakout and then retest it, it's high likely that we have another card in our sleeve pointing towards the upside. And the alpha I share from Saturday or maybe from Friday has worked pretty well. You can see in here that it bounced at extreme levels of shorts. This is the delta. It broke out, it retested, and now is in the middle of the range. If you try to take a snapshot of this and see where you reach the middle of the range in each and every time in here, where are you with the price? This is the second, this is the third, fourth, fifth, and now we are here. We tend to have further upside. So this is just alpha that won't work every single time, but you can see that in all this range in here, starting from August, when we reach the middle of the range, we are in green, we tend to have further upside. Maybe not immediately. In here we have another push, we came back down, and then after we had another push. But this is still looking healthy for further upside from my point of view. And we saw that immediately above the price, we have liquidity, which seems to be, by the way, already attracting the price. Maybe the video will be too late. I'm going to try to get it out as soon as possible. 61,500, largest level in the past 3 months. I think that's still the case. Interestingly, it has reduced a bit. It was in very light yellow. Now is a little bit less. On fair value gaps, I show you that there has to be lots of volatility throughout this week. There are big events starting with Google and many other companies' earnings. And at the moment, we have left 2 fair value gaps below the price. Those are supporting the idea of taking the CME gap. Notice that this one ends at 67.2. That's $100, slightly higher than the bottom end of the CME gap, but is supporting with additional liquidity that could attract the price once again there. Unfortunately, doing that with the CME gap or with the fair value gap or whatever you want, the liquidity to attract the price might spoil this double bottom formation. So all eyes on that decision time at $68,500. Is this just going to go back and take that first and then break out? Or if it does a breakout and leaves those things behind, be on the lookout for a potential dump later on from higher prices into the fair value gap. Don't assume that all fair value gaps need to be filled. Sometimes they get filled after weeks or months, but the highest likelihood, the 95% of them, do it very quickly. Delta is right now back in the green, but with a very humble delta of 6.8K, which means that there is really not a big gap in motivation up or down for the price. The dollar has hit now for the second week our resistance, which is represented by this trend line on the RSI weekly applied to the dollar. Zooming in, you can see that 104.5 continues for the second week to be holding the price. So I'm tempted to say that this could become a local top for the dollar. Too early to count victory, that this finally is gonna dump the dollar for months to go ahead. I don't know. I just hope it's the case. Forecasting indexes is just mentally difficult. And dollar has been goofing around with us constantly, making us believe that this is the top, and every time we count victory, we see a little bit more green coming in. We have the high signal and the back performance. We don't have bearish divergences anymore on the weekly, and we are hoping to break down the trend line. Amounts of liquidations from longs every time we are about to break the tops increase significantly, meaning that there is a high risk every time that you're about to break a range. And that's why when we do break a range, we don't enter while breaking out. We don't enter against resistance. People tend to enter on confirmation of the breakout. I have entered way before, below 60s. All the entries were shared publicly on Twitter, Telegram, and Instagram. And at the moment, you can see that we have a big accumulations of liquidations below the price. We have incredibly high levels of ask liquidity, people wanting to sell their Bitcoin with limit orders. We have institutions now playing a lot more than they had in all this period of 8 months. Notice that institutions and whales were having a lot of fun in this period up until we got to 73.5. After that, there's been just some humble entries and exits from them. Whales are in green, retail is in red. At the moment, there are some whales playing in here, but don't get tempted to think that they will stay forever. Of course, eventually they're gonna call out for some sort of top. Remember, my biggest concern is this 70K. What's gonna happen if we, in practice, we hit $120 million of resistance on Binance? Will that just become a dump, or will that get hit by a big order of buy that gets all this 100 million fully liquidated underwater? I don't know, but I'm gonna get my popcorn and I'm gonna enjoy, hopefully this week, the show. If we do break it, it will be amazing for my bags. If we don't, just more of the same, maybe for a little bit longer. Guys, I remind you that I have 30,000 in rewards if you open a new account on Bybit using the link down in the description. Discounted fees as well is available, and if you open an account on Bybit, you can use it on my website to get access to all the indicators and pro tools to run with bots for free. All of that based on volume traded. And don't forget to subscribe my Telegram, Instagram, or Twitter to get notifications real time with the breakout times, targets, and U-turns, which are the most important ones. Sometimes I publish a video and I call out for something. I make you aware that there are some risks. When those risks knock the door, I let you know on one of these 3 social networks, which, by the way, only subscribe from the links in the descriptions. Don't get scammed by fake trading parrots, because there are plenty of them. They keep sending me screenshots, people, of all the things I'm apparently offering to people. I will never talk to you on a private message. You have my word that if you're talking to me, that's not me. See you in the next one. Bye-bye.